And I'm feeling like a total imposter today because I came here to learn about retention and engagement. I remember coming in 2019, and this event was one of the best events that year. So I'm really pleased to be back, really excited to see so many faces, but feeling like, what can I tell all of you? So I thought today what we would talk about is how we have thought about driving growth in the FinTech category. Because many of you won't know this, but ZestMoney has taken a very different path to the typical FinTech companies. And it's been a very long and very hard path, but we believe that we have created a version of growth and long-term retention that is actually quite unique and unusual in this market. So we're going to talk about that today. But first I thought, who am I? Maybe for those that don't know, let's just quickly start with my journey and why am I here? Why am I here telling you about this? Do we have any slides? I don't know if anybody has. Cool, okay. Coming soon. So I actually, as you just heard, I came to India about 10 years ago. And I actually came to build a business 10 years ago called Pay Later. So the reason that's important is suddenly in the last 2 years, buy now, pay later has become this very sexy buzzword. But actually, the category itself is a very old category. And I think that's a really important takeaway, which is that anything meaningful, any meaningful category or valuable product proposition, especially in a market like this, takes time to build. And so I joke now because a lot of people call me like the OG in FinTech, which basically means I'm really old and have been here a long time. But that's because sometimes patience is a virtue. And it does take a long time to create a market for something that is truly disruptive or changing the way the status quo has been done. So quick, fast, I don't think slides come out. Anyway, we don't need slides. Quick bio. Basically, 10 years ago, I was sitting in London working for a FinTech company, and they were going global. And they said, India's going to be the biggest market in the world for FinTech. I said, I agree. I've been saying that for years. And they packed me off to Mumbai to start this business. Now, 10 years ago, there was, Paytm was a mobile ringtone company. Anyone remember that? Yeah. Flipkart only sold books, fact. And there was no such thing as UPI. In fact, there was no such thing as Geo, right? Didn't exist. So building a FinTech business 10 years ago was quite a challenge. I would definitely say it was a hard thing. We would go and have meetings with bankers, with lawyers, even auditors wouldn't work with us because we would sit there in the meeting and say, we're going to build a FinTech business, we're going to touch the lives of 100 million people, we're going to do digital lending at scale, and these, even auditors, even lawyers would say, impossible, hasn't been done before, right? We would say to bankers, we're going to do digital KYC. And they'd say, impossible, not allowed, right? So we had this constant wall put up of what we could and couldn't do. But the point is we're still here doing it. So the relentlessness of, in spite of that type of response, the relentlessness of keeping going with the vision, which was to truly create a disruptive financial services business for the mass market. For those that don't know, I did a few other random things on the journey. The UK company actually went bust. It completely imploded. At one point, it was a unicorn. I remember just a few months after it became a unicorn, it blew up. So that was a good life lesson, warning everyone. But it didn't stop my passion for the cause. And so I stayed in India and actually did a bunch of stuff in FinTech, in and around FinTech. Do we have any FinTech entrepreneurs here? Who here is in FinTech? Okay, yay. Oh, cool, and female. Wow, that's good. So look, the last 10 years in FinTech was such an exciting time in India, right? We had IMPS, we had UPI, we had eKYC, all of the problems that when I came 10 years ago basically got solved one by one over the decade. And that is what kept me going, right? Because it was that original vision, that original passion and obsession for what this market could be in FinTech suddenly started to happen. And rather than always obsessing about, the company that I was building at that time, I've always obsessed about the cause. What is the mission, right? Companies will come and go, trust me. Unicorns will come and go quite quickly. But actually, entrepreneurs building disruptive products will exist forever, right? Look at Elon Musk. The company actually doesn't matter. The mission and what you're trying to build is the key piece behind that. And so I have never, for 1 minute, lost the faith and the belief that this is going to be the most exciting FinTech market in the world. And I even hate that word FinTech because it's like a buzzword, it's like a theme. Actually, this is going to be the most interesting financial services market in the world, where all of us have an opportunity to build that, to build the future of that and the new digital products that are going to emerge. So that's what I've been doing for the last 10 years. Wait, sorry. Okay, this is working. Let me just explain why India is so interesting from a FinTech perspective, in case anyone doesn't understand. Okay, sorry, stop. There we go. Okay, it's happening. So basically, I hinted at this, but some really incredible things are happening in this country. And it's happening right now, live in front of us. When we write the history books of the India FinTech journey, I tell you it's going to be one of the most fascinating stories in the world of economics, of cultural change. We have, right now, one of the youngest and most digitally adopting consumer bases on the planet. This population of young digital native consumers have a very different expectation of how the world will work around them, right? They don't understand the traditional concepts of financial services that are still the predominant way of doing things in Western markets. What that means is we have a massive opportunity here, right now in front of us, to actually change the entire way that financial services is delivered in the world. And India is going to be the best place to build these products because we don't have legacy. We are an absolute classic leapfrog market when it comes to financial services. Just like we never had to build all of the physical wire and cable and physical infrastructure of the internet, we've gone straight to mobile. The same thing is going to happen in financial services. And this isn't a thesis anymore. This isn't like a great idea that we put in our pitch books. It's happening right now, and it's actually happening faster than most people in the traditional industry ever imagined. UPI took everybody by surprise. Nobody in the traditional financial services industry expected the traction that we have seen in UPI in such a short space of time. UPI transactions today are now 15 times bigger than credit cards, right? So whatever way you look at it, credit cards have not seen mass adoption, and UPI has, and it's accelerating. And what it teaches us is that technology-driven products can be better and can run faster than things delivered by traditional incumbent organizations. And that gives confidence to my industry. All of us are now desperately building multiple different flavors of products for this UPI generation. The generation of customers who don't understand why you need physical branches and physical form factors to access their financial life, right? And I think this chart's really fascinating. You know, what you would have heard 3 years ago from banks in India was that, you know, you can never replace the bank. The bank is essential to the customer. But already, literally in the last 3 years, the customer has stopped using the bank as an app. They've jumped straight to new products and new technologies in a faster way than you've seen in any other market in the world. This is an enormous opportunity. At the same time, within that, the opportunity we specifically are going after is one of consumer credit. India has one of the lowest penetrations of consumer credit on the planet. For such an advanced economy and such an advanced digital economy, we do a terrible job of empowering our consumers with access to credit. And this affects everybody. Everybody in this room must be selling something. And if you are selling things in this economy, credit is an essential part of the functioning of this economy. So the fact that consumers today cannot easily get credit to pay for school fees, to buy laptops for their children, to improve their homes, the fact that that credit is so restricted is limiting all of us and limiting the economic potential of this market that we all believe in. Unsecured consumer credit is not something that we should be scared of. It's a very powerful, empowering part of any healthy consumer society. And we believe in creating consumer credit products that work for the mass market, where smaller, more bite-sized credit products are more appropriate than, say, credit cards or personal loans. So that's what we've been doing for the last few years. And I just put it another way, because I think sometimes this surprises people. Almost everybody in this room doesn't understand the problem statement. We probably all have access to credit cards, right? Does anyone not use a credit card? Yay! Okay, good. Keep it like that. Try ZestMoney. But the truth is, credit cards have not been a fast adopting product. Whatever way you look at it, right? Credit cards are still a super niche product in this country today. And that is the opportunity. And that's where we come in, and that's what we've built. So we sort of pioneered the pay later market in this country. You can call it pay later, you can call it EMI. It's now called embedded finance. That's the new buzzword. There's always a buzzword. But as I said, forget about the buzzwords. What's the core proposition? We're powering the consumer to afford the things they want. But let's just get to the meat and what I wanted to focus on today, and maybe the main thing to leave all of you with, especially anyone building in FinTech today. What is the secret sauce? What have we done that we think is different to the normal way, especially consumer FinTech businesses are built? And not just in this market, even globally. Basically, simply put, we have made collaboration our superpower. And I want to really emphasize today and sort of promote this concept of collaboration as a marketing superpower. I think it's something that is really, really ignored, and I think there are so many opportunities, not just in FinTech, but across many, many categories and verticals in this market, to basically use collaboration and use partnerships to drive not just adoption of your product, but continued engagement and retention of your customers. And that's been our absolute focus and strategy from day one. We were heavily inspired by a company that some of you will have heard of called Bajaj Finserv. And if you think about Bajaj Finserv and what they've done, it's genius. Without having any branches, or very few, they now have branches, but for 20 years they had 0 branches, they managed to parasite on the existing retail environment to drive customer adoption and category creation. We've taken the best bits of that and put that in an online environment. We said people like Flipkart need more financing in their products to get more customers, get more engagement. We can provide that. And by providing something that's so useful and so essential to the brand, we can actually work together to acquire customers and create a category. So I think our biggest success, our biggest superpower as an engagement or retention strategy has been, how can we create win-win-win partnerships? And I really mean that. When I say win-win-win, what I'm talking about is a win for us as Zest, the FinTech, a win for the brand, whether it's an e-commerce brand, whether it's a manufacturing brand, and ultimately a win for the customer. If you provide something of value to the customer, the brand will keep you in pride of place. And that is what gives us the ability to acquire customers and create a category at much, much, much lower cost than any of the competitors in our space. So just to re-emphasize this collaboration point, we're now taking it to the next level. We don't just believe in collaborating with online brands. We collaborate with so many parts of the ecosystem, whether it's payments companies, whether it's EV bike manufacturers, even now things like education institutes. So we've partnered with some of the leading colleges in the country, universities, master's programs, to finance their customers and therefore build our customer base. So this idea of giving the brand, giving the partner something that's so valuable to them, such that they basically give you customers, is not new. It's not groundbreaking, but it is hard. And it's very, very hard to do it properly. It takes time and it takes patience. I'll just give you some simple examples, but these are the types of work we do day in, day out. We have a huge marketing team, a fantastic team of genius marketeers, but they don't spend all day long worrying about ZestMoney's metrics. They actually spend all day long worrying about the marketing metrics of the partners we work with. So by making them almost like a marketing tech company for our partners, we are able to drive volume, drive GMV, and drive revenue of our partners. The reason this is so important is that we basically get to reduce our CAC, reduce our costs, and grow at the same pace of a very large, overfunded FinTech, but without suffering negative unit economics. And it was really good to hear in the opening session from Sanjeev, that good reminder that earnings are earnings. At the end of the day, we all have to make money eventually. And there's something really wonderful about the fact that we know we have a business model that makes sense. Positive unit economics are very fashionable again. And so by working with partners, by driving this truly collaborative model, the win-win-win, we are able to create a much, much more attractive business profile within our company. This is the holy grail for us was when we finally got an exclusive partnership with Apple. What I mean by that is in a large chunk of Apple stores in this country, their general trade reseller network, we are the only, i.e. the exclusive finance partner that they offer. This took about 5 years of hard work, 5 years of negotiations, 5 years of flying around the world to see the right people in the right cities, but finally we got that pride of place in the Apple stores, and by powering their expansion in India, which is such a crucial market, we are able to grow our brand and grow our category. And it's really funny because we've obviously just had, all these big IPL campaigns, and you see every FinTech splashing their logo all over the IPL. You don't see us there, I'm afraid. We're too mean to spend on IPL. But what I try and show to my team is seeing the Zest logo across 45 cities, across thousands of hoardings next to the Apple logo should give us as much pride. The fact that our partners are choosing to promote us to the world, free of cost, zero cost, is something that we're so incredibly proud of. So again, I can't say this enough, make these partnerships win-win-win, show that the partner truly gets value from the partnership, and then it's very, very easy to basically hijack their marketing budget and use it for your benefit. So that's my super hack for anyone building, especially in FinTech. I think in FinTech, it's even more important because you will find that as you scale, costs can really increase. CAC is a dangerous thing in a FinTech business. And so we spend our life working on ways to reduce our costs by making life better for the partners that we work with. There you go. There's another example with one of our favorite partners, Boat, who are absolutely brilliant at working on these kinds of programs. So finally, actually, and this is very important, we also realized that collaboration doesn't have to extend only to digital brands and retail brands. We can also use our learnings, our understanding of the digital ecosystem to basically power banks as well. And what we have now begun is a very exciting expansion program where we are becoming the de facto BNPL partner for a number of the largest private sector banks in the country, giving their customers access to our product and our network. And the reason this is really important is, again, we get to drive the category, drive expansion, drive customer engagement without having to acquire customers ourselves. So this is a really exciting, low-cost way of growing the BNPL category in the country, and again, benefiting from the bank's prowess, their understanding of their customer base, but bringing our understanding of a new product and category to them. So win, win, win. Let's just wrap up, but I think what is at the center and the heart of everything that we do at Zest in driving these collaborative partnerships is that we know our customer well. We understand the digital credit consumer better than our partners, and because of that, we know what it takes to build the product, the brand, even the comms that they need to understand this product category. So I said it was hard to build these partnerships. I probably didn't emphasize how hard it is, but actually the hardest piece and the most important piece is understanding your customer, delivering what they want again and again and again, such that you can convince the brands that you are the domain expert. And that is the hard thing about hard things, working every single day to improve your proposition to the customer such that you improve your relationship with the brand. So we've been working very hard at this over the last 6 years at Zest, before that with our previous company, but I can tell you that it has really started to kick in and pay off at scale. And we're seeing very, very exciting growth rates because of all that hard work that we bedded down over the years. We've been growing about 50% a month over the last 18 months, and that growth is stable and sustainable and comfortable because we've built it on the back of these very deep partnerships with a very low cost base. So I hope I've given you a vision of how that can be done, how you don't need to make Google and Facebook rich in this country to build a large category and an enduring business that can have positive unit economics. But I will say it again, patience is a virtue, and sometimes the hardest things are the best things, but they take time. Thank you very much.